Well, we've been up and trading for 46 minutes now. What's happening with the corn market? Trying for the fifth straight session higher. Here's a look at the 6-month chart for December corn. I thought we'd start here. We are trading higher. We're up 3 cents right now at 5.18 I wanted to show you that we've gained 11% over the past 6 months, or nearly 52 cents to this corn contract. This is new crop. New crop soybeans, we've gained nearly $1. It's up 8.8%, nearly 9% higher. Now, the beans right now at $12.27, $12.28 and we're up 4 cents here in the first 45 minutes. To the wheat market, we'll look at front months here. Soft red, up 91 cents over the past 6 months. That's a gain of 15.5%. We are lower right now at 680.5, so we're down 1.25 here on the session. Hard red, from soft red to hard red, this one's down 6 cents today, 744.5, but still is one of the leaders over the past 6 months with gains of nearly 26%. That's $1.52 in 6 months. And let's go to the cotton market. We've been pulling back here, down 78 points, and we're trading 88.05. But this market has gained 26% over the past 6 months. That's equal to 18 cents. Yeah, we traded below 70 for such a long time, and now trading at 88. You know, our guest today is Chris Swift. Chris is with Swift Trading. And I want to talk feed grains here. And by the way, those gains are pretty impressive across each one of those row crops.
Oh, they really are. And so we're just coming off contract highs from yesterday in the corn market. And then both beans and wheat, they tested their contract highs. So they're just a little bit off from there. But all of them seem to be climbing a great wall of wood. We've got a great crop this year, but it's not excellent. We have other countries that are burning up right now that have some issues with their crop out there, and then our dollar continues to move lower, making a pretty good setup for U.S. demand going forward. And everybody says, well, there's the top of the market there, but I think we got a lot more to go, and I'm not looking at just today or tomorrow, but I'm trying to stretch as deep out into the future as I can possibly see. And we get tied up really quick in what's happening for the next tick. And trying to get away from that is very difficult, but it's an issue that has to be addressed going forward, because these prices of commodities are not going to slow down. They're not going to stop in the price expanse, and we're not going to stop inflating this economy. So we better get busy doing something on it, because it's not going to slow down anytime soon.
All right, we're talking with Chris Swift. Chris is with Swift Trading. We've got a quick break here, but when we come back, we're going to dig into livestock markets. This is Market Day Report. Well, are we looking at a perfect storm here? We talked earlier about contract highs yesterday in the corn market. That means the price of corn, if you're buying it, is going higher, right? Well, who buys it? Feedlots buy it, right? Well, here's live cattle futures. This is what they're selling for at this point. The fat cattle, the ones that have been on feed, and that August sits at $219.07. We've run down to just under $218 earlier. We're right now $1 lower, and we'll talk about how in less than a week that will not necessarily have to match up with the cash trade, but they have to be in the same ballpark. And so we'll talk about that in a moment. October, it's the most traded, $212.42, and it's down $1.12. We go over to the feeders, and what's happening with feeders? Well, we have popped back up on that January. We fell to $298.25, and now we're back up to trading above $300, but down $282 on the session. August is settling up the end of this week, and it sits at $333.65. It's up 7 cents. We'll talk more about how that converges with the index in a moment. September feeders, $321.40. We're down $282. Maybe a different way to look at it, because we did this with the row crops earlier. Let's look at the October live cattle contract over the past 6 months. And we're down $21. We've lost 9%. So definitely well off of our record highs here in the live cattle market. Feeders. Let's look at the September. This is over the past 6 months. We're down $37. Losses of over 10%. And again, right now trading $321.17. It's off $305. Our guest is Chris Swift, Swift Trading. Chris, I want to start on let's start on the feeder side.
Okay.
Maybe a good place to start. In that August contract, it will converge with the index. And that index is just a kind of a rolling average without getting too deep into the weeds here.
It's just a weighted average, and they take the number of sales that they accomplished yesterday. They'll drop the previous day, they'll add that to it, and they calculate it up to today's. When you showed those charts up there, we got 3 major tops. April, May, and June made 3 major tops up there. We're really just doing a seasonal tendency. We tend to top the market in the summertime. We tend to fall off a little bit in late summer, and that's what we're doing. And we're in a seasonal tendency lower until about the first week of September now. When we get into September, we have to look deep out into the spring of the year where we got these big discounts. And let's look to use those discounts if we're not liking the prices we've been paying, because they have been showing some very, very negative losses out there. Then here's an opportunity to buy them significantly cheaper than where the cash is. Cash right now is trading around $335 to $336 via the index. And here we are just right at $300 for the January. March, April, May, right around $298. So all of those areas in there look very attractive. And if you drop another $5, $6, $7, that might be an opportunity that has not presented itself in a long time. Of interest is watching how the prices are changing within the market. So when you showed the live cattle on there, the most interesting thing to take note of is that it is resuming normal carry. When August goes off the board, October will be the cheapest month, then December a little higher than that, February a little higher than that, and April a little higher than that. It is normal carry, and that shows that the fat cattle market is starting to resume normality. We should see the feeder cattle market start doing the same thing, and we have. It hasn't inverted yet, but it has begun to tighten those spreads considerably, and that shows that the market is going back into normality again, because carry is a normal function of the futures market.
And we didn't have that over the last, month and a half, 2 months or so. That live cattle, the October through April, we're all within $1 of each other.
And they were inverted. So the spot month was the highest, and it went that way all the way down. And so now we're just kind of changing that back just a little bit more to normality. And that seems to be what the industry is now seeking, is normality. We've reached the top through rationing of consumer demand. We've now knocked out some processing capacity. We've got more animals coming in from the southern border now. I think they let 680 head across yesterday, if I'm not badly mistaken. However we look at it, we are going to import more beef, whether we like it or not. It is not necessarily a necessity, but it is a way to continue to economically allow everyone to enjoy beef. And not everyone can afford the same things as other people can. So as bad as it may be, if we want to have good, safe, quality beef for everybody, it comes into the United States, it's still inspected. However it may go out and processed, and whomever may benefit from it, the consumer in the end will probably benefit from it, specifically in food service more than anything.
And again, perfect storm here, because the price of corn has been rising.
Oh, yeah.
Price for, for your live cattle, fat cattle, that's coming down. We're watching those prices get cut into as well. You have moves by the administration to do things. Again, all of these things seem to just be headwinds for the producers, whether it's the cow-calf level, the stocker, or the feeder level. But about 30 seconds left here. Is there a way forward? Is there hope for them?
Oh, absolutely. This is a commodity market. This is a commodity industry, and commodity prices fluctuate. Commodity trading is inherent. The risk is inherent in commodity trading because it's act of God, most of anything. The drought, too much rain, too much flood, and then we get human emotions into it, and there's no telling what happens, and this is where we wind up right now. But it is a commodity market. It's always going to be a commodity market, and there's going to be fluctuation in a commodity market.
There you go. You heard it. Chris Swift is with Swift Trading. And Chris, always a great conversation.
Absolutely.
Thanks for being here. Again, Chris Swift is with Swift Trading. All right, we're taking a break. Back with more Market Day Report.